Welcome to the Money GPS. You came here for the truth, so let me unveil that for you. While we have food prices and inflation going sky high, there's something else that's going up along with it. I will break that down here in today's video. This is a big concern. You at home watching, you need to understand why this is the case. I'm going to break down each and every step of that today. Let's begin by taking a look at this. Food prices to keep going up as costs surge. Kraft, Tyson, McDonald's owners say that higher fuel, labor, and ingredient expenses are driving inflation. I started highlighting this, many years ago, but in this current cycle, what we see is that the higher input costs are being passed on to the consumer. I said that that would be the case, and it didn't take a genius to figure out, but the odd part about it was, even though I mentioned it and certainly documented it all along, many people said, no, the companies are just going to take a hit. The companies are not going to increase the prices on the consumer because the consumer will rebel. But that isn't the case. That did not happen. The consumer could rebel in one way, shape, or form. They could shop at a different store. They can, choose this product over that product. But the truth is, the vast majority of people are paying more for the same stuff that they were before. Okay, maybe they choose a different brand. Maybe they went no name instead of, the brand name. But ultimately, overall, people are spending more. And now, along with food and your gasoline and everything else, what has gone up? This, to me, is extremely worrying. Americans are putting more on their credit cards and taking out fewer mortgages as they need to increasingly borrow to cover the higher cost of everyday essentials and respond to rising interest rates. Did you hear about any of this when interest rates were at zero? No, not at all. But suddenly they start to tick higher and everybody is caring about interest rates. Isn't it so? Isn't that the way it works? Zero? Hey, who cares about that? That's not a problem. And now they've gone up so little and suddenly they matter. They matter a lot. There were a record of 537 million credit card accounts in the first quarter. That's a jump of 31 million over the past year. Huge. In the meantime, mortgage originations totaled 859 billion for the first 3 months of 2022. That's the lowest in 2 years. Why? What's happening? The consumer is tapped out. While mortgages are still by far the biggest component of household debt at 71%, the data shows how consumers are relying more on credit cards as decades-high inflation boosts the cost of everything from gas, food, shelter. You see what's happening here? This did not take a genius to figure out. I know you knew this already, okay? Maybe I'm preaching to the choir for some, but now we're getting that information that proves that this is the case. We are following through this cycle. And now the Fed tightening policy and mortgage rates are the highest since 2009. Americans are refinancing them much less, as well as auto debt. Of course, it goes on here, okay? This to me is really key because you see what's happening on all forms of debt. They're going up. They are getting more expensive. And this ultimately will not just impact the individual, but the nation, the corporations. Corporations, if the price if the cost of basically doing business, they all do business with debt, goes too high, well then, they start to slow down. That's just the way it goes. Okay? Home buyer, mortgage payments plus 42% year over year mortgage payment on the 4-week rolling average of the median asking price. Look at this right here. You could see how it has risen considerably. Taking a look at this, I just thought it would be interesting to just add this in here. It's talking about Ukraine and Russia, but some of the quotes I thought were interesting. Essentially talking about a possible world of chaos and turmoil. And I see that today. Maybe it certainly could get worse, but when I look at it, to me, this is an extreme in every sense of the word, is it not? Let me know. Put that down there. Hit that thumbs up if you agree. Even the luxury home market is taking a hit. Home sales, luxury home sales, sink 18% in the biggest drop since the beginning of 2020. Now, I've seen your comments, okay? And I know personally, I've seen it myself, where we have homes that go in a snap. That's a fact. But when we look at it overall, we are starting to see a slowdown that's happening. Inflation finally drives a stake through, quote, transitory. Expectations about the pace of price growth had been one of, I can't read this, okay. Of Fed Chair Jerome Powell's top assets, and now they may be turning into a liability. If anybody believed transitory was, come on, I mean, it's a joke. Like, stocks rallied, and the soothsayers started to suggest that the Fed might be able to stop raising interest rates in September. In a sense, the idea that inflation was transitory never truly died, perhaps until now. So I'm just interested to see what happens over the course of the next little while. You know, the whole transitory narrative, it should have never been allowed. Okay, but it starts with the general public. If the general public rejects it and says, no, I'm not believing it, you do find that the media starts to pull back on it, and then everything else starts to pull back. You see that. But the people believed it. I guess they wanted to believe it. Silicon Valley braces for tech pullback after a decade of decadence. So we're seeing here, and they mentioned a whole bunch of different companies and what they've been doing. I've been hearing about this. The pulling back on advertising, that's one factor. Facebook and Amazon have slowed down their frantic hiring paces, while high-flying newer companies, including Scooter Bird, company Bird, and email client Superhuman, have laid off workers. Tesla's Elon Musk says he has a super bad feeling. And look at these other ones, okay? Same. Okay. We're seeing kind of this trend. Higher interest rates, slow down in growth, businesses are worried, can't borrow at cheap prices. This thing starts to have a snowball effect. People getting laid off, what's going to happen to the debt? It's going to go through the roof. And that debt isn't cheap debt. And it's the type of, credit card debt and so on, the expensive debt to begin with. But it could rise even further. A lot of these credit cards, there's some that have the 0% for the balance and so on. A lot of these credit cards are at a minimum of 17% interest. Some of them I've seen 24% interest. You can't pay that off. It's just not possible because the interest is accumulating so quickly. This is really dangerous. If you can consolidate your debt, if you can eliminate your debt, speak to a good company about this. It's really important to get it out fast as you can. This is talking about the weather patterns that are happening here, and essentially all it's trying to highlight is basically everywhere there seems to be an issue. Super hot temperatures in areas, the Southwest, what they discuss here, heavy rainfall and flooding, potentially in the Pacific Northwest and Northern Rockies. So extreme weather events. This means if they're growing food, they're going to have a problem, and that, in effect, brings more pressure onto the individual. My friends in Australia, glad you stuck with me here, because if you see what's going on in Australia, I've covered it all throughout, and the prices of homes had gone berserk, just like they did in New Zealand, just like they did in UK, Canada, and so on. But now, house prices to drop by 15% in Australia, according to CBA. A major bank has warned that supersized interest rates will have a chilling impact on house prices as potential buyers run scared. Everywhere the froth needs to come out of these markets, it would be healthy for a 15% decline. It would be healthy for even more. But everybody freaks out. They freak out when they see just a small drop. Why? Because of debt. Because of debt. That's why. This is some unfortunate news here, but I gotta be the messenger in this case. Shanghai reimposes dine-in ban And you look at, once again, more shutdowns, lockdowns, curbs, prohibited actions, whatever you want to call it. That's unfortunately, it seems to be, spotted. They're doing it more selectively, but we don't need to see this right now, I'm telling you. And it continues on with this. Shanghai ship jam spells supply chain trouble. And you could see that on your screen right here. Again, this is going on. I mean, it just doesn't stop. But even in the North Sea, ship jam in the North Sea. Look at that. This is from June 9th. And you could see that. Extreme, to say the least. It's not, the biggest port in the world that's getting affected, or the biggest, shipping lane and so on, but it's important. It's important. It's going to affect people. And as we see what, the US dollar strengthening during this period of time, you look at yields on US bonds, and it is really creating problems for other countries, and in this case here, Japan. Why is the yen so weak? The biggest reason is the move toward higher interest rates in the US. That makes dollar-denominated assets more attractive for investors seeking higher returns. So you're getting on a 10-year, you're getting 3%. And while 3% is still below inflation, it's still better than what we were seeing a few years ago. Remember the negative interest rate bonds? I mean, crazy, like ridiculous. But anyway, that's a whole different story. And that brings me to this, okay? Price controls. Many people today would love price controls, and you look around the world and you see different countries with price controls. And I think this is extremely dangerous. This is an extremely dangerous policy, and people should be aware of it, because you see what happens when these go into effect. It only creates another issue. It's like, you're getting this pain every day in your stomach. Pain in my oh man, this pain in my stomach. And I just take a pill. Pain goes away. But I never resolve why that pain in my stomach was there, or my head, or what have you. You need to resolve the underlying issue. If you can't do that, oh, it's just temporary. This whole temporary nonsense should never be allowed, okay? Because it's, quite frankly, not believable. And this is just talking about what's happening in the markets. And again, it's debt. It's debt. Always remember the debt markets, the individual debt. You look at what's going on with corporate debt at record or near record highs, and you see all of this together. And why is there a problem? It's because things spiral down. They have a problem, and sort of like a, in a sense, like a tornado, and they take everything with it. And that creates an issue, because you start to have this, tornado or snowball, whatever it is, it starts to bring other things with it. So you say, no, I'm not involved in that. I'm not involved in subprime, so I don't need to worry, right? Well, that wasn't the case in 2007. So that's my message for today. Look, you can support this channel simply by hitting that thumbs up, okay? I've also got another channel. Are you aware of that? Yeah, it's true. It's true. Okay, so the other channel is basically all really good, short, high impact videos. Super short, 20, 30 seconds, a lot of them. And I put it right down there in the description, right at the top. So you can get that. Definitely check it out. Subscribe to that channel. That's the stuff that you can share with your brother, your barber, your sister, your dog, your, whoever. And that's the kind of stuff that it's going to get them interested. Really short stuff. I'm not talking about the depths of the Federal Reserve and all that. None of that. Okay? Just really good, useful information, bite-sized pieces. Okay? And don't forget, everybody out there wondering, don't forget to buy the dip. Okay? I know your avocado toast is becoming more and more expensive today, but buy the dip. Okay? The influencers told you to do so. All right? And I wasn't even showing my screen. I do that occasionally. Buy the dip. Okay? The influencers told you to do so. All right, that's it. Take care.